Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Hope everyone is doing well. We are taking a look at what's been going on all week as we've had a very busy FOMC driven week. So we've had, it seems like all of the FOMC members having to say something, having speaking engagements sprinkled throughout the week. We had Powell yesterday, which was kind of a non-event, which is probably good. And let me explain why, and I'm going to walk you through how we can measure this. So this is a big part of what we do day in and day out in the mastery. So I know a lot of you are already familiar with it, but for those of you that aren't, what we want to do is study the place where there are traders who place their bets, so to speak, just like we would place our bets on the S&P moving higher or lower or bonds moving higher or lower. We can do the same thing where traders are making, speculating on what the Federal Reserve is going to do at the different meeting months. So one thing you'll notice across the top here, I know it's a little small, but one thing you'll notice across the top here, if I can make it bigger, oh, there we go, is every one of these contract months for this futures contract called the Fed Fund Futures is aligning with the meeting, the FOMC meeting. And we're not expecting any action in May. We're not expecting a rate cut in May. And that's been fine. We've known this for months, right? There's not a high probability of a quarter point cut in May. We got to June. And as long as June and July, which is where most of the conversation is being had right now, as long as these were not disrupted by Jerome yesterday, we can carry on with the knowledge that by the time we get to the July 31 meeting, there is going to be at least one rate cut, either at the June meeting, which is June 12, or on the July 31 meeting. So we are expecting as we get into mid, arguably late summer, we're going to have that lower quarter point cut. Now, when you fast forward to the end of the year, traders will also say, okay, we're at the 5.25% to 5.5% right now. That's the Fed funds rate. And where will we be come December 18 or the end of the year? And take a look. Expectations are for mostly a 4.5 to 4.75 point rate, which means we're pretty much still on track for 3/4 point rate cuts. None of that has changed. So as long as Powell did not disrupt that expectation, as long as he didn't undo that, there's no reason for equities to sell off. Am I saying we punch up to higher highs? Here's the great thing. I don't care. We're traders. No style of trading, and let me say this really clearly, no style of trading should require to make a profit brand new highs in anything. So if you're finding yourself needing, I need all-time highs from positions, or I need a new 1 month high, I need a new quarter high for this trade to be a profitable one, step back and ask yourself, oh, that's right, it's Thursday, I'm supposed to be in essentials. Hang on, gang. Hey, bot, just tell them to go to YouTube. Sorry. Yeah, bot, just tell them to go to YouTube. My bad. So if you're taking a look at, sorry, I was supposed to be in the Simpler Essentials room and I just completely forgot what day of the week it is. We just had our webinar yesterday and my brain is still on our top tier pro webinar and I'm just in another mode. Sorry about that, Essentials folks. All right, so back to the S&P and back to the expectation. So as long as Powell did not disrupt that that overall movement higher, and you can see he hasn't, we can take advantage of moves into support, daily price movement ranges. And let me share with you something. Like I said, I'm kind of in professor mode still from yesterday's webinar. How many of you are able to catch that webinar? You still can. If you get a top tier prosystem.com, you can catch that webinar. And let's see, the sound is cutting in and out. Odd. Okay, it's just one of those days, huh? Just going to be one of those days. All right. So if you take a look at the chart here, the daily chart of the S&P, why am I bullish and why do I remain as bullish as I am? Really simple. We have the mean reversion down here. And many of you who are mean reversion traders like myself will notice they're happening and the probability of holding has been very, very high, right? But we're not getting there as often. And let's face it, part of trading is keeping our pipeline full. Look at how few mean reversions we've actually really had. Very few. and most of them were in the beginning part of the year. Since then, we really accelerated away from the mean, and we're not revisiting it. So what do? Wait for that wonderful day where we get a dramatic sell-off and play that? Or do we adjust and say, okay, there's clearly something going on where the mean reversions, right, down in here, MR, are not happening. What's happening with size and participation and price, right? Participation and price. That's always what's running through my mind. There's so many ways to calculate that. There are formulas for that. I don't want to sit around with a calculator and an abacus sorting that out while I'm trying to trade. So what I'm going to do is say, look, there is another way I can find support, and that's the daily price movement range. And you'll see how consistently this year, that's where the participation's kicking in. That's where the eyes are at. That's where the size is coming in. And we'll continue to take advantage of that as long as, and this is the really important part, the trend remains up. This is bullish energy, right? That is energy. A body in motion tends to, right? So let's just get right to it. Newton. Who knew Newton was a trader? We want to stick with that law of motion because it does apply. It does apply. Continuation is more probable than a reversal. All right. So let's take a look at bonds. That's the S&P. Let's take a look at bonds. Same conversation. Let's start with where we are. We have a lot of red candles, and that gets my attention because red candles in the top tier system are telling me participation and price are bearish, right? Not neutral, not bullish, but bearish. So I don't want to short because I do have an overall neutral environment. Now, in a neutral environment, which is what we've seen for the most part this year in the long bond, means some days we're going to be up, some weeks we're going to be up, some days we're going to be down, some weeks we're going to be down. But we're stuck in a range. We're going back and forth in a range. Here's my number one tip. Find the trends, find the setups there first. Exhaust the opportunities in a trend. Exhaust the opportunities in places where the structure is already, in fact, we call this tool the multi-structure. Find where the structure is already bullish trend, bullish momentum, and focus on those. That means we're going to look at things like financials. We're going to look at things like the S&P. We're going to look at things like XLE. If we're pointed in the wrong direction, now I do mean wrong in a very binary way. Wrong is focusing primarily on choppy markets, or worse, waiting for a stock like Apple or Tesla to get out of its overall weakness, right? Very different conversation than, say, buying something like Bank of America, which, by the way, happens to be a position that we're in the Sector Secrets Mastery. And a lot of you have been asking, Rag, if I'm interested in the new tools and I'm interested in the mastery, how do I do that? There has never been a better time to be able to grab both of them. And right now, that's exactly what this is. So if you haven't checked out the webinar, I know a lot of you said, I listened to the replay. Very cool. Larry says, I listened to the replay, even though I already signed up for the course. That's awesome. Thanks, you, Dio. There's a lot of great information. You know, how do we take advantage of what's happening right now? Because this has been a year and continues to be a year of account growth. We used some examples in the webinar of things like gold. But when I captured that chart for the webinar, gold hadn't been at its full power. I think I captured that chart for the webinar when it was still at about 205. And I mentioned, hey, we're well above that now. This is what I mean about Newton, right? This is what I mean about, maybe my next indicator needs to be called Newton. So this is what I mean about Newton. If we have something that already has all the cues, and how do you know? Well, I'll show you again. Take a look. Green candles, right? There's your daily price movement range, well above the mean reversion, mostly bullish structure, well above the equator. This is what I call this white dot. That's the equator, bullish hemisphere, bearish hemisphere. If we have that in play, we buy. It just really is that simple. We don't think about, oh, well, it's gone too far. How many folks thought gold had gone too far at this resistance around 204 and now are all, thinking, oh, well, gosh, I guess it didn't go too far. And worse, maybe they're adding to the short position. We don't want to do that, right? We want to have such clarity about direction that we're almost just compelled to trade because it's so clear. And that for me, and I don't know if y'all know, I wear very thick glasses. For me, having the color coding does a couple of things. I know all the calculations are happening without me having to do them manually. And I used to do them manually once upon a time for some of these things. And then once the color coding is there, it's paint by numbers. And that's where gold, things like gold are in play, Bank of America. Well, as long as we're talking about some open positions, we're also long Merck, right? For similar reasons. This is not as, you might say, Rob, it's a non-trending environment. It is. This is really the best look in healthcare. So if we're going to get a push in healthcare, this is for me the best look in healthcare. Is it as good a trade as Bank of America? Let's talk about trade this, not that. If someone said, Rog, if I had to choose Bank of America versus Merck, what would I take? Take Bank of America. They're both great trades. They're both valid, but Bank of America has the added benefit of the green multi-structure, the green grab hitting the gray, where the green meets the gray. All right. So let's see. Let's grab some questions here. And let's see. I listened to the replay this morning. That's probably the old link. Yeah, that's the old link. Mark, we had the Sector Secrets Mastery webinar trial that was, gosh, it feels like a million years ago, but thanks for watching. Hopefully it was helpful. And the one we did yesterday is at the Simpler Trading website, or I would say go to toptierprosystem.com, Top Tier Pro System, or I'm sure you can find it. Here we go, under live. So that's the one right there, consistent swing trades. Consistent being the key word. When I do a webinar, many of you know, we don't talk about just a hand. Look, we're going to have 2 webinars. So we talk about some examples of where we're looking for the tools. So you can see the example of the alignment that I'm looking for the tools to show us how to set up trades. But the one thing that I always love to do, and we do this with every webinar, is I say, okay, what's the net result? Hang on here. What's the net result of those trades? How are you doing this year? Because let's face it, I'm not looking to hit home runs. I'm not looking to hit a couple of wins. I'm looking to grow an account. And that's exactly what we want to do, right? I mean, no one wants to just hit home runs. You want to win the World Series. You want to be the champs. And that to me is sort of the same analogy. How do we take an account and grow it? And that's what the goal is with the top tier system. And then, of course, once you're in the mastery, you put it all together. So that's really the focus, gang. Consistency, not only in the tools, right? Those of you that have been with me for a few years know, Rob, we don't have new tools all that often. So clearly, if you're bringing something out new, there's a reason. Absolutely. And every tool that I've ever presented is something that I continue to use, whether it's the V-score, HPMRs, DPMRs, they are still part of the process. There's never a tool that I've actually abandoned. I've only evolved them like we have with top tier. And then, so we have consistency in the tools. If I have consistency in the tools, then I have consistency in the setup. So I'm not having to relearn some new setup. I'm not having to reinvent the wheel. We just continue on with something we've been doing for years, for me, decades. And then once you get consistency there, it's amazing how consistency leads to confidence, and that just loops on itself. And that's really what account growth is all about. So that's really where, in terms of where we sit right now in the positions that we have, whether they be Freeport McMoran, gold. And by the way, what about losses, Rog? Do you lose? Of course. I tell everybody in day 1 and day 2 and day 102 in the mastery, if we're operating at approximately a 68 to 72% win rate, which is what I do, and we don't want 100, by the way. Rog, are we aiming for 100%? No. I have found that when my win rate starts to exceed 75 to 80%, I'm taking profits too soon. So there is the flip side of that. So really a great place to be is within 68 to 72, 75% is kind of the upper end. And that means that for every 10 trades, let's talk about losses. For every 10 trades we take, we're going to lose about 3. I had 2 losses this week. So while gold and Freeport McMoran are going exponential and giving us 2x and 3x gains, I did have a loss in the Dow and I did have a loss in the Russell. What was the loss? We look for a percentage of premium paid. We limit that as best we can to percentages of premium paid, never max debit. So those are things that we'll talk about again next week. We're going to revisit the conversation of, what are algos and why do we care and how are they affecting this world and how are 0 days expiration options affecting what's happening at the broader level? Why are trades that I might have taken 5 years ago not performing, or even just 3 years ago not performing the way they were then? What has changed? There's a lot that's changed. And that's what we're addressing here with Top Tier Pro System. All right. Let's see. Any questions? Uh, let's see. Oh, really? Sacha Newton lost most of his fortune in the stock market. He should have, darn it. Hey, he should have come grab the top tier system. I could have saved his fortune. Oh my gosh. All right. I appreciate that, Eddie. Thank you. Thank you. Um, let's see. Nvidia, is there any juice left? Oh, great question. All right, let's pull up Nvidia. But before we go there, let's do the alignment, right? Let's do a little bit of what we would do in the mastery and what we're going to do in the top tier pro class. NASDAQ is the top of the food chain. SMH is our sector. What we want to ask ourselves is, are these largely still bullish? I would say they are, but SMH has lost its swagger. Really important, gang. This is what top tier pro system does. See that? That little window right in there? That is the transition from bullish energy to neutral energy. This is not it's time to short. Not at all. This is time to not expect new highs. This is time to not expect those parabolic moves. This is a function of this bullish energy. This is going to probably keep us within the zone that you can see we have with the Darvis, which is fine. It's still tradable. Let's keep our expectations realistic in a non-trending environment. That's SMH. SMH is what contains, it's the container for NVIDIA. NVIDIA is the best look in semiconductors. NVIDIA is having to really carry the rest of the semiconductor sector on its back, right? That's a pretty heavy load to carry. So is NVIDIA done? No, not at all. NVIDIA is a buy, but let's talk about trading. Does everyone agree that trading is timing? Is that something that everyone agrees on? Trading is timing. So timing matters a lot. If I know I've got certain Fed members speaking, if I know I've got a laggy SMH, I could either wait for the mean reversion, which is not all that far away, right in here, or I could buy daily price movement ranges. Right now, I'll tell you, I don't have exposure in NVIDIA, but if you're looking for it, I would say you're looking for it. That was probably the first zone in here, which we're still in, as you can see. Well, actually, let me highlight that better than that. So this is our first zone. That's the daily price movement range zone. So I'm just grabbing the top to bottom of that gray zone back here from the 27th. So as long as we operate in that area, that's the day that you would look to enter would have been either the 27th with the bearish Momo, that down candle, or the 28th, right? Now, I'd say the first was fine too. We're still in that zone. But here's the thing. The day that you don't want to buy it, let's talk about what not to do. We don't want to buy the calls on the way up. We don't want to buy the calls in the yellow zone, right? Even on the way up, if you bought the calls in the green zone, you're probably fine and took some profit. Okay. So I'm not paying much attention to NVIDIA. I'll be straight up, but does it have the ability to bounce? Yes. And then I would look for the target initially at the gold zone and then at the Darvis level, which is sitting at about 967.5. The gold zone resistance, I'd say if you're looking at the middle of that zone, it's about 918. It's about 918. All right. Okay. Next question is, if I have a smaller account, would I be able to follow these trades? Vin, yes. And here's why. If you checked out the replay, Vin, you'll notice I talked about the cost per contract. We talk in points and dollars, right? That's so when you look at every one of my trade examples, I never brought up a percentage once because it doesn't matter. Your question is exactly why it doesn't matter. I love your question. Thank you. We talk in how many dollars does it cost to enter that trade? And then how many dollars did we make or lose when that trade was complete? And you'll notice most of my trades are $500 or less in terms of what a single contract would cost. So if you're saying, Rag, I could afford one or two or four $500 or $400 or $300 options, great, because that's the majority of what we do. We focus on scalable options. It's not about small account versus large account. It's about scalability. Can I do the same thing in a $5,000 account as I would in a $50,000 account? So great question. Great question. And the answer is absolutely yes. Absolutely yes. All right. Again, just like that, our 20 minutes are up. Thanks as always for being here for Charts and Coffee. If you haven't checked it out yet, I only have one, maybe two classes a year. This is one of them, toptierproclass.com. Check out the webinar, at least get an idea of what we're doing. And then I'll see you all tomorrow, same time, same station. Be good to each other, gang. I'll talk with you soon.